Let's pick up on the activity around the blue chip banking space. We see KCB posting a 1.2% rise yesterday. Barclays also on the buying list. What are your views on position taking around banking stocks with results being released anytime soon?
Well, we still had double-digit growth on most of the banking stocks, especially the local ones. In Q3, and I think that is what investors are expecting in the year-end 2011 results, and those will be coming out probably early next month, which means that investors have started taking positions. I also think that now that we have had a bearish period on the market, they will be looking to signal investors that things are still okay, and that means that they will probably be giving healthy dividends, which means that there is position taking based on the fact that investors are expecting that it's going to be a good dividend year. That said, I believe that it is really speculative behavior, so we should see their prices settle towards the end of this month, and then we watch for what happens going forward.
Let's take a look at the telecom space. We've got Telkom Kenya, which is wanting to take Safaricom on in the data space. They've just come out and announced cheaper unlimited internet access tariffs, and they're undercutting Safaricom. If you look at that price on a weekly basis, sitting at 990 shillings, and that's where Safaricom sitting at 1,000 shillings, and Safaricom on a monthly basis sitting at 3,000 shillings, whilst Telkom Kenya has come in just below that at 2,990 shillings. The data war is really taking shape here in Kenya. How do you expect it to pan out? Do you think that the likes of Telkom Kenya can start stealing market share away from this growth area?
Well, the one thing we have seen from the price wars that we saw last year is that Kenyans have a tendency to be very patronizing. So it is not just about the price, it's about the service delivery. And if they can deliver better connectivity and better speed, then that would probably give them an edge. What we have seen is that despite the fact that Safaricom lost out in terms of subscriber numbers, Safaricom did see an increase in terms of voice revenues, which means that basically it's about service, it's about how much confidence the market has in the players. And so the battle now is really not about just prices, which I think has been proven by what happened in the last period. And therefore, I think whoever is doing the undercutting, whether they're going to decide to go the price war way, then they have to also realize that the users are also looking at the level of service delivery and at also the periphery products that have really been what supports Safaricom, because you might go on data or just voice, but Safaricom has a whole a whole range of products that investors are probably buying into.
And you've got internet penetration only sitting at around 36% in the country, so a lot of scope for growth there for all the telecoms players, one might say. Let's just look at the fuel marketers. The pump prices have been decreased in the country, and that could have an impact on margins. What are your thoughts on how this is likely to impact Total Kenya and Kenol?
Well, I think Total will suffer more. Kenol is more regionally diversified. They have been they have been performing better. So I think Kenol Kobil is not going to feel much of the pinch if we compare it with Total. They have a better distribution system in terms of they have proven that or they have developed a very good distribution system. The fact that they're within the region and that presence sort of gives them a bit of stability, which I feel will work towards or for them. That said, I think Total did not do very well in Q3 last year, and I think that they're still going to feel a bit of the pinch. But still, again, this prices going up and down, it is usually passed on to the consumer. So it really does not reflect directly on the bottom lines.
And perhaps doesn't bode well for inflation. Let's just look at that IMF report that's come through in terms of forecast for inflation. They see it slipping to 12% June 2012 and 6.5% in 2013, a year later. They've got real GDP forecast at 5.3%. That's in line with the Finance Ministry's forecast that it's just released for 2012. What are your views on this rather bullish IMF report that came through?
Well, I'm an optimist, and for us, you know, working in the stock markets, that is actually a sign of good times ahead, and you know, we really need it. It's been 2011 was a really tough year. The second half of 2011 was really tough for us. We need a break, and I believe that if this just goes this way, then we might at least get a break, a really much needed break. And so for us, it will be a sigh of relief. I believe that we've still been seeing signs of growth. We believe that it's very good news that we are still looking at a growth year, and despite all the externalities that have hit Kenya, and the fact that we are seeing inflation coming down. We've had good rains. We are starting to see fuel prices go down. The dollar has stabilized. So I think that their projections are quite correct.
Samuel, let's just look at interest rates going forward. We've got the next MPC taking place on the 1st of February. Now, the IMF has said that they're calling for further monetary tightening. This report was released after the MPC decision in December, where they kept rates on hold at 18%. They kept rates on hold again at 18% in January. Do you think we're likely to see rates being increased at all at this point?
Well, I think we'll probably see a stagnation. They don't want to, you know, beat a hasty retreat, and they want the initial intentions to actually take effect, and they have started taking effect. And I believe that what they are going to do next is really dependent on which way inflation actually goes, and so they're going to be watching to see if their intentions in the first place, which was to rein in inflation and to try to support the shilling, are actually working, and they feel that it has reached a point where they have achieved the critical mass, then we might probably see them even decrease it. But that said, I think at the moment they feel that it is about ensuring that we don't get another, you know, another surge in liquidity, which would then work, you know, be a counterproductive in terms of what they're trying to do with the interest rates.